My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today, zooming in from Boston, we have Nicholas Delmonico, who is a real estate investor focusing on multifamily properties. And Nick has a background in something very, very interesting, and that is endurance sports. So if you're watching this, if you see in the video on YouTube, you'll look at and see Nick as a handsome young man who looks like he's in very good shape, especially compared to this old dude. So Nick, welcome to the show. Great to have you.
Thanks for having me, Dave. It's a pleasure.
Likewise. So, hey, Nicholas, I love the name of your company, Iron Focus Investments. Tell me a little bit about how the name came about.
Yeah, so it kind of stems from my background, touched on it a little bit, the Iron Focus or the endurance sports. So I compete in Ironman triathlons, which is basically a fancy way of saying that I like to do swimming, biking, and running. So these is a race that
one right after the other.
Exactly. Yeah. So it's a 2.4 mile swim, 112 mile bike, and a marathon all at the same time, or one right after the other.
Which is exhausting me just hearing you say that. Right. How many of them have you done so far, Nick?
I've done 5.
Wow. Congratulations.
Thank you. Yeah.
Oh, that is something else. And how did you get, just out of curiosity, how did you get into the endurance thing? What sparked that?
Yeah. So my parents were both really overweight when I was growing up. They were kind of led an unhealthy lifestyle. My dad worked a lot. And after a while, he started going down a path. He had a heart attack. And the doctor said, you need to lose weight, get healthier, or you're gonna die from this. And so he kind of went extreme and started doing Ironman. So I grew up watching my dad, and then my mom eventually started doing these races. And so when I was a little kid, I used to do the little ones. They'd have it'd be like a 100-yard swim, and then you ride your bike a mile, and then you run around the track once for like
Iron baby.
Iron babies for like 10-year-olds. Yeah. So then when I grew up, I wanted to do a race myself. And so that's what I did. When I turned 18, I did my first race.
That's really inspirational. I mean, hats off to your parents for going more than all in. That's way more committed than a jab of Wegovy or Ozempic.
Yeah, well, that's also kind of what led me to pick the name. Was I was kind of thinking something that resonated with me, something I was passionate about. And the race is called an Ironman. So I took the iron and put it into Iron Focus, and that's kind of, I bring that determination and that focus that I used to train into real estate investing as well.
Well, I've only got to imagine that the level of focus that you have to be able to complete, not only just, train for an Ironman and then complete one, pretty next level, I'm imagining there. Okay, cool. Thanks for explaining the backstory there. So Nick, tell me a little bit about your company and what you do when it comes to real estate.
Yeah, I might as well give you a little bit of a background. So I kind of started like a lot of people do, looking to invest in real estate. I didn't know a lot about the industry. I'd worked in finance. I went to school for finance and economics, but I didn't really have any background on how to invest in real estate. My dad's in construction. None of my family is really in real estate. So I started, as everyone does, listening to podcasts, reading books, and I was like, okay, let me see if I can start somewhere and buy like a duplex or a triplex. So I started looking at areas around me, putting in, offers and seeing, kind of what I could afford at this point in my career. I was fairly young. And then I started going to networking events, and people started telling me about this multifamily. And I was like, this sounds pretty interesting. Seems like it's a little bit easier way to scale and kind of make it an actual business instead of just a hobby, because that's what it was for me at the time. It was just a side business, a side project. And so I started, going to these meetups and talking to people, and I ended up joining a mastermind, which is basically just a big networking group that was focused on multifamily, because I didn't have any support system. I didn't have any mentor. I didn't have really anyone leading me. I was kind of just on my own with books, which you can get pretty far with. But once you get into multifamily and you want to do bigger deals, you kind of need partners to work with. You can't really take down these deals on your own. And so trying to build that network is what kind of led me to this mastermind. And I basically started learning, started networking, finding partners at events. I've been all over the country. I've been to Phoenix, Denver, Florida, just to go to these networking events and meet people. And I actually really enjoy it. A lot of people are like, it sounds like a lot of work, but it's fun to meet people you don't know. And otherwise you wouldn't connect unless you were in the space. And so that kind of led me to then finding bigger deals. And so I started in, I believe 2022, I started actually starting to pursue deals, and we did our first deal in 2023, the summer of 2023. And then there was a little bit of a lull. A lot of people were having trouble finding deals. Deal flow was down. And then last year we did 2 deals, which we were super excited about. And we're looking to continue the momentum and do a couple more deals this year.
So it sounds to me, Nick, like you're part of a group of co-GPs in these projects. Would that be fair to say?
Yeah, exactly. There's about 4 or 5 people on each deal, and they each has a specific
So you're involved in 3 projects at the moment, if my counting's correct.
Correct. Yes.
Yeah, okay. So how many total units do you have in the portfolio at the moment, Nick?
Yeah, over 325.
Nice. Congratulations. Is there any particular market area that you'd like to focus on more than others?
Yeah, I would say the Sunbelt is.
And for folks that aren't familiar, what does that actually mean?
So the Southeast and Texas included. So I look a lot at Texas, Florida, Georgia, the Carolinas, anywhere that's sunny. People are leaving cold states like Massachusetts to go somewhere warm.
Yeah, we're both looking kind of bundled up right.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
No. Okay, very, very cool. So you work with some other what are called co-GPs on these projects. Typically in that kind of scenario, Nick, each partner brings a specific skill set to the table. What is it that's kind of your secret sauce? What do you enjoy doing, and what do you find comes easier to you than perhaps some of the other partners?
Yeah, I really like finding deals and underwriting them. So underwriting is just a fancy word for analyzing a property to see if it's a good investment.
You're a finance guy by background. That kind of makes sense.
Yeah. Exactly. So I started in finance, so I kind of know my way around an Excel spreadsheet.
Yeah.
Pretty well. So I look for assets that are for sale, either through brokers or contacting the sellers directly. And then I have a spreadsheet that I plug all the numbers into and then, make some projections and see if we think this could be a good investment and return good returns for investors. And then we'll speak with the brokers and say, hey, you're asking for X amount of money. We don't think that it's worth that. Would the seller be open to something along these lines? And then a deal can then be formed from there. So that's kind of my skill set, is going to finding deals and analyzing them.
So coming from this finance background, it's been a real roller coaster over the last few years, especially in apartment buildings, multifamily real estate. You kind of got into it when the you-know-what had hit the fan. So a lot of operators have been complaining, they're really low interest loans have come due, and now they're refinancing and they're costing twice as much as they used to, and insurance costs have gone through the roof, and property prices haven't come down enough, and rental rates have come down, and vacancies have gone up. All these challenges facing multifamily these days. What do you guys look for? What's kind of like your ideal property that makes sense these days for you?
Yeah, so these things can be seen as a negative, they mentioned, or a positive. It sounds like a negative if you currently own, but it can be a positive if you're looking to buy.
Yeah.
You know what I mean? Because if there's a property that has higher vacancy and the the rental rates aren't really improving and there's a lot of expenses. These can be seen as opportunities for people like myself. And so basically, our buy box would be somewhere around 100 to 300 units. Obviously, it depends on what type of markets, because some markets are a lot more expensive, like Miami, than it is to buy in, the middle of nowhere in Texas.
Right.
But so we typically target 100 to 300 because that kind of improves economies of scale. So you can have an on-site property manager and a leasing agent who's specific just to that property. And then we type to look at assets that are, 1980s, 1990s, early 2000s, because a lot of these properties have been held by, investors for 10, 20 years. They haven't really put too much money into them. So there's a lot of units that can be renovated. We can bring in new appliances, flooring, cabinets. We're not looking to do a gut renovation. Maybe down the line, there's something that we'll look into, but right now we're really just trying to find operational efficiencies. Maybe they're spending a little bit too much on a certain expense. Maybe they have too many people employed. And we have a couple properties in the area that we can then use the same contractor on all the properties. So we're only paying one guy instead of 3 different guys in 3 different properties. So that's kind of how we can reduce expenses for the property and add value. So we're focused on value add deals.
Okay. That makes a lot of sense. Now, quite often, as being part of one of these groups of partners buying properties, everybody needs to pitch in and bring investors to the table, raise capital for the deals. Are you involved in that as well, Nick?
Yeah, absolutely. Like I said, everyone has a specific role. Mine starts with underwriting, but everyone's job is to find investors as well, because the deal doesn't go without investors. We always put our own money into the deals. But a lot of these deals are pretty big, so we can't really do them on our own. So we look for outside capital, people, we're looking for a good return, have cash on the sidelines, and are looking to get into real estate. There's so many benefits. I'm sure that you've talked about these on your podcast quite a lot, but as you know, there's just tons of benefits from tax incentives and cash flow, appreciation, all these different benefits.
There's a lot of different profit centers in a good apartment building, that's for sure.
Mm-hmm.
What do you find works best these days, Nick, for bringing on new investors? Because I have spoken to other operators who went through, the go-go days of 2017, 18, 19, 20, 21, 22. And it just seemed like everybody and their cat was making money hand over fist with apartment buildings. Then things came to a grinding halt, and a lot of those LPs and some of these other deals have lost money. They've had cash calls. They've had deals completely go sideways. So some folks are seeing that it's a little bit more challenging these days to bring new investors on board. What have you guys found that works best for you in today's environment?
Yeah, I think personal meetups and LinkedIn outreach has been my main source. Is I reach out to people who I have connections with, I focus a lot on the Ironman community. That's kind of been
that's your affinity
target investor, because a lot of these people, they understand what it takes to do an Ironman. And so they know that it's easier to trust someone with your money when you know that they work extremely hard in their training and in their life. So it's kind of just a, pretty niche community that I think not a lot of operators focus on, because it's not a super common sport.
Not a lot of operators are doing Ironman.
Exactly.
That's really smart. Yeah, that's a smart niche to go after. And I don't know if it's true or not. I'm assuming, I could be completely wrong. But do people who do Ironman competitions, do they tend to be fairly successful financially as well? Or they just tend to be fitness buffs?
I would say so, because a lot of the times the people who do these types of races, they kind of take that intensity with them and everything they do. They're not usually just one to do a race and that's kind of all they do. I mean, there are professional triathletes, but a lot of them are, business owners or entrepreneurs, or, people with successful jobs. So it makes sense that, to go after someone who has to focus on the type of people that is pretty successful in what they do, it seems to me. I mean, that's what I've come to experience so far.
Yeah, very, very cool. Well, Nick, as we're wrapping up our conversation, because time flies when we're having fun, what are your goals for the company over the upcoming year? At the time we're recording this, it's March 2026. Where do you see you taking the company over the next 12 to 18 months?
Yeah, so we'd love to do around 3-4 more deals this year. I'm not trying to explode and trying to get $1 billion of assets under management. It's not really my goal. My goal is to try to find, a couple deals here and there and find some investors that we can bring on who are just looking to grow with me. This is a long-term business. I want to bring them on for the first deal and have it go really well. And then they invest in the next deal and the next deal and the next deal. And we just continue to roll their profits over into more deals and just continue to grow. And like I said, I'm not trying to do tons and tons and tons of deals. I'm just trying to find some good investments and bring on some good investors.
Yeah, quality over quantity, right?
Absolutely, yeah.
Makes sense. Nick, if people want to connect with you, if they want to find out more, what's the number one place they can go to find out more?
Yeah, you can definitely add me on LinkedIn. I'm very active there. I post and I'll respond to you. Nick Delmonico, I think it's Nicholas Delmonico on my LinkedIn, actually. Yeah, Nicholas Delmonico, Iron Focus Investments.
And you're probably one of the only ones in Massachusetts.
I would say so.
All right. Perfect. Hey, Nick, thanks so much for being on the call. It's been great.
Yeah, thanks for having me, Dave.
All right, everybody, take care, and we will see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.